Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the indices recover just a little bit, especially on the Nasdaq after hitting the VWAP off of the August low. So we are seeing a little bit of a rebound here. Same thing here with the S&Ps. They're pushing up a little bit higher. Take a look at that on the 2-hour chart. It came and did make a new low overnight. Of course, that's on the December indices. We've already done the roll. The roll hasn't completed. Roll will complete, I believe it's on Thursday, but the roll had already started last week. I believe it was on Wednesday, but it wasn't until Friday I rolled into the December contract. So as I said, we did make a new low here and started to push back up. We'll take a look at some other key markets, such as the gold market. Continues to languish. If you remember last week, I talked about potentially a move into the high 1780s, and that's exactly where we've gone and dipped to. And then take a look at crude oil. Nice rebound here on crude oil. You can see here we started from the get-go at this upper level, the 69.55 that we've talked about so many times, and we've just continued to move higher from there. We still have to move up about another 80 cents, actually a little bit more than that, about 90 cents before with the close above that to extend a new leg higher up here. Take a look at the economic data that we have for today. We had German wholesale prices, but other than that, that's it. There's no other data to speak of. Going into the U.S. session, take a look at tomorrow. We do have CPI, which will be out tomorrow. Take a look at the European session, UK employment tomorrow, and let's see here. That'll be it, other than the CPI, which will be tomorrow. And let's see here. Going over that data. Don't see anything else. We do have on the 15th, we will have a UK CPI. So that we have it. Obviously, the CPI is going to be a concern in here in the States. The thinking is if we get a stronger number, which is probably going to be likely, whether or not the Fed will taper. I just don't really see it. A lot of people remember when we had the employment data in August and we were going to get taper in August. I said that wasn't going to happen. It didn't happen. So I'm sure the Fed may find a way to just go in and trip itself out of that idea. But we'll still see. Maybe they'll say there'll be a heightened sense of scrutiny, possibly. That may still trigger it lower. With that, we'll go on and just take a quick overview of what we stand here on currencies. And we're seeing Euro continue to go on and pare back a little bit. Cable also. Odd, also pulling back, and the dollar yen. So as I mentioned, there's no real news to speak of per se, other than German wholesale prices, and that is it. So might as well just going to get started on the analysis. We did move here, but lately nothing ever happens in the European session to speak of. So let's go on and just go and get started. So we'll take a look at the euro. So last week, the euro was turned away from the 119 area. We started basically there and just continued to go on and push back. Value area comes in at 1768, with the bulls needing to defend 1738 on a closing basis. Resistance to start the week will be 1885. So we'll just go on and go with 1768. I don't know why this is having a hard time. Let me close this out. Looks like it doesn't want to populate. Hang on. There was a stupid Microsoft update this weekend. Wouldn't be surprised if that had something to do with it. 1768. And then on the upside, if we do try and push higher, just going against these bodies would be 1885. And doesn't mean that this is the actual resistance for today, but on Mondays, we like to give a little bit of a lay of the land as to what we're looking at going into the week. Key will be that defense of 1738, but right now you can see the amount of trading here, so the value levels comes in at 1768. Obviously, it's still bearish. Moving on to cable. So cable was turned away from the 38.78 area to start the week. The initial support comes in at 37.52. You can see that right here. Looks like it's a quiet session here in cable, but you can see here we're just kind of like, to a certain extent, in no man's land. But we did get this almost looks like a gravestone doji. Wick is just a hair bit long, but you can see here, so it really opens the door for us to push lower. So do like that 37.52 for support. Resistance will remain 38.78. Still trapped in a relatively tight range here. So resistance aren't going to get unless we make a run back up to 38.78. For now, the pair is boxed in 125 pip range, and boxed in as it is indeed. Let's now move into the Aussie dollar. So the Aussie, after closing above the key weekly level of 74.27, and that was from the prior week, not last week, but the prior week, we had finished 2 Fridays ago with a bang, and then all we did was just whimper and give it all away. After closing above the weekly level of 74.27, spent the prior week giving it all back to finish at the lows. Immediate support comes in at 73.28. You can clearly see that. We came close to it already. $73.28, followed by 72.81, and resistance will be 74.04. And moving into the dollar yen, which has really gone nowhere. Dollar yen remains mired in a range. To start the week, support will be 9.45 with resistance at 10.41. So although we can make the case it continues to remain around this 1026 area, but we're really not going to run into it until we get past this body. So once again, 945 and 1041. And it's just trading in a range. Moving ahead to the cash dollar index. Oh, there we go. I was punching into the wrong place. The dollar index recovers off the lows last week as equities falter at their highs. Resistance to start the week will be, obviously did that thing wrong. Should have been 93. Let me take a look at this. Messed it all up in here. Bear with me. I would have wanted a little bit. I'm not sure why that came out that way, but anyway, right there, which is just below, and that's going to be 92.27. Support comes in right there, actually. And that's what it came up with, 92.41. I don't know how I came up with that other one, 92.41. Obviously, I've transposed numbers, but it should have been 92.41. Oh, that's what it is. I put 92, so that should have been 93.14. It seemed high, but my thinking here was same thing here. You see this body right there? You can push up along here, but it's not until this body that we're actually going to see the resistance. So that was a 93.14, although it's all transposed. We'll continue to push here. To say it's all the way down here would be crazy, but it's actually right there to hold that body. And still make the case that it could be right here. We're kind of hanging on. Like this level right here. You see that reaction? And just a lot of trading right there. You come across there, that's 92.49. That's a little bit too close though. Right there, 92.41 that we just mentioned. And it remains bullish. Moving on to Bitcoin. Well, we'll continue to slide. And this is not a surprise in light of the way the technicals have gone. So after a huge sell-off coinciding when the president of El Salvador hitched the country's wagon to Bitcoin, has the weekly chart with a bearish engulfing pattern that took out the lows of the prior 2 weeks. And let's take a look at that on a weekly. And you can see that heck of a bearish. And we came in just at the time. I didn't realize that. I mean, well, that was gonna falter. No one knew, but I mean, at the time, remember, we even had our markets here at 53,251, and this thing looked really well. I mean, it just kept moving higher. We even noted at the time it would just barely take a breath, kind of, and then it would just make another move, take a breath, and make another move. And the next key that was 53,251, and look at this huge sell-off that not only engulfs but takes out the 2 prior week lows here. So it really opened the door for us to move even lower. We'll move in now. Actually, we can stick with the weekly right here for at least for the moment. The support level will be 42,708. You can see where I'm coming up with that there. You can see here the close on this week, and we've had the wick defend that. And I guess you got to pull this back, comes back further over here, but it's 42,708. Everybody that bought trying to defend this thing is basically all underwater, except for right there, just that nibble right there. Immediate resistance is going to be 46,412. You can see that big level that we have there. Obviously, that's where they try to push into just in the session. So 46,412. Now, if you look at this overall, you'd have to still say it's bullish, but because this is overwhelming, this engulfing bar, the pressure is going to still remain lower. So I do have to go and change this to bearish. If you look on the bigger thing, oh, actually, if you look, overall, you could still say bearish. But I mean, for the move down here, look at that. You have to say, wow, that's bullish. But, because it's such a dramatic move in such a short time right here, have to go with bearish. And certainly looks like we're going to that 42,708 to test that. Probably take it out, see how many stops they have, but definitely be looking at that area. Take a look at the S&Ps. So SPX, these futures broke support on Friday at 44.84. You can see that pink line right there. Falling an additional 40 handles. Resistance to start the week will be 44.82 with support at 43.34. That's 44.34, followed by 44.22. So you can see here we came close to taking, but we did not push that extra leg down. So we're looking at 44.34. And resistance is going to be 44.82. Here's another case where it's, if you look at this market, can't deny it's bullish or been bullish. If you pull this for the back day, oh yeah. But on a short-term basis, because of this huge break here, you'd have to go in and push this on the bear side camp. You can see where the 44.82 is going to be that initial resistance. So to flip this to bearish. Next thing we'll take a look at is the Nasdaq. We saw a pretty good pullback here in the Nasdaq. I made the case, last week was, we kept bumping up against this range. With the roll, I did not trade it well as far as I've still made money, but I had come in short into the New York Open, and I had not rolled into the December yet. So we took off in the New York Open, and but I hung on to it, feeling that we'd still pull back, and I was able to get out. I came in late in the afternoon, but missed a big chunk of the move, thinking, okay, I'll just stay during the roll, keep myself out of it after getting out of this with a few dollars. But I've been yakking all week long since Tuesday about the Nasdaq and the those key FANG stocks. If you check my feed on Twitter, I was pretty vocal about that. But we did go in and see this market break lower. Now, when you looked at it on Thursday, it didn't look like necessarily those fangs were going in necessarily. They didn't come apart, but the futures did go in and press them lower here. Take a look with the Nasdaq key level as we're coming back up. Is going to be this 15,519 right now. They actually may just go with that low right there, which is 15,511. Still pushing up higher. And let me see when I take a look at this over here. When I see what we can go and push up into, you can see there's this area, this 15,523, 15,545. I've got a little bit of a zone window in here. You can see right here. So 15,523, 15,545, and you got to close there. There was a high volume mark here, a 15,575. I wouldn't think we'd be able to get there. Anything's a possibility, but for starters, it'd be this 523. There is a higher volume level here, right there at 536. I think potentially I like this 15,546. 15,546. We'll see whether we can get there or not, but 15,546 for the support. It should be resistance. Then support. Well, I had this in the European session, Asian session, but I've had this in place for a while, which is this VWAP off of the August lows. Looks like we nicked it. Now, I would have expected the market to go beyond that if it was in the US session, which is obviously more critical than any other session. But the US session and come down here, and then there's a whole lot of support here in this area, which really comes in around 15,340-ish, 365. So I would have thought we would maybe started here, then open up a US session, dip even lower. Doing a little bit of a rebound. We'll see if we do get some resistance. And the market might be a little bit defensive as we go into the CPI. So maybe we can extend this a little bit further, and then we see if we can run out of gas. We move this to the high there. That VWAP is way down, way up here. So I think we need to have that one there. So on here, we talked about 546. You can see here also, right there, there's 551 right there. So I think anywhere between there and 577 is absolutely huge. Could we make it up there? Yeah, anything's possible. But I think that would be a sell at that point. And if you get short around 546, I think we'll just see how long, whether or not they could push up here, I doubt that. But that would still open the door for us to move lower. But you are seeing that they're making a stand here at the VWAP off the August lows. Looking at support, I have to go with 15,365. Like I said, the market was struggling here during Asia, just sitting here. I think we got up to 5,480 in early Asia and came back here, and it was just sitting here Thought we might just sit around here and not do too much and then break lower in the US Open, but we're trying to push higher. So I'll go with the 15,365. Same thing with that. Because the move, we'll have to mark it as doesn't seem to want to cooperate. Well done, Excel. Let's go and move into the gold market. Hope some of y'all weren't tricked into this. I've been bearish talking about this for a long time, all the way going back to July. And although I never thought it would break like this, we came back. And this market did pretty well holding here, and it really tricked some people, and then really super tricked some people as we went up here, and then people got fooled again. Once again, it was the banana in the tailpipe, and a lot of gold bulls fell for it all over again, only to just go and get snickered. And we had talked about this as we moved lower and even had 1802, but said, there's still a possibility this thing could even get beyond that. Not only to 1794, but up to the high 1780s, which is exactly what this thing has done. Take a look at this market. Until, as I told you before, until we get above 1865 on a daily close, it really doesn't matter. And that might have sounded kind of crazy a week ago, but that's the reason why. Because I say you can come up here, it doesn't make any difference. Until you get up to 16, this is just all a bunch of little dilly-dallying around, not really doing anything. We can push higher, and obviously some people got fooled nonetheless. So resistance, we'll just go with 1812. Can we push up to 1808? Yes, but 1812 is going to be the decider, basically the pivot. And support, we can make another move lower here. If we break here, it's really going to, anybody who's bullish, I think they'll really just say, forget it, and might get whacked. So we'll just keep it simple, go 1771 if we get that break. There's some support in here. I mean, for right now, it's 1782, which they kind of held that area here. They didn't quite make it to 1782, but we'll just go right here and see whether they test this area here. We'll just call it 1778, but boy, they could really hit a big miss. But we'll probably hang around here maybe for a little bit longer. 1778. And lastly, with crude oil, so crude oil remains capped, and I put it here at 70.71, which that's not even right. I don't know why I didn't save it, but I put on here for crude oil that we're going to have to get a daily close above 71.15 to get an extended leg right now. So that's what counts here. If we can get a daily close above 71.15, that will open up a leg to higher. And I'm not sure why I didn't save it, but I had my immediate resistance here. You can see here, I used that level before, and that actually caught the top of the market at the time. That level comes in, you can see right there, comes in right there at 70.47. And I actually moved it up higher. So I know when I did the analysis, it might be sitting on the website. I don't know, but for whatever reason, it didn't save. It was going to be 70.80. I think it's 70.85 or 70.83. Let's go with this body here. Let's see, it was lower right there. I guess this body right there. 70.85. So 71.15 is key if we get a daily close, but immediate resistance is 70.85. And for support, I had the 69.55 followed by 68.98. So back here to 69.55 and then 68.98. Put that here. I'm only gonna put it that wide, but you can see here we've been pushing up against the 69.55. Remember, we opened above 2 weeks ago and we faltered, slid all the way back down to challenge the pivot of 67.95. We rallied, came back down again once again to challenge the pivot. We rallied and we opened up with a pretty good little bang on Sunday session, and we're still holding up. But once again, that resistance is going to come up there at 70.85. If we can get it, we would need a daily close above 71.15 to trigger a new leg up. So that's where it stands here for the bias chart to start the week. I'll get that posted, and we'll see you in the chat room later on. Thank you.